Welcome to All Things Financial with Jack Driscoll. Each week, Jack takes on all things you thought were hard to understand about your finances and makes it fun, easy, but most of all interesting. From insurance to the best way to save your money and squeeze the most out of the dollars you put aside for your rainy day. And now you have a friend in the money business. Here's your host, Jack Driscoll.
Welcome back again, everyone, to another edition of All Things Financial. We're getting near the year end, so I thought it would be a good time to continue our series on some year-end tax strategies and just things you ought to be aware of. What I wanted to start with today was a lot of people ask me almost over and over again, hey, I can only gift so much money, right? Or they'll say, I can only gift so much money without paying tax. Or if I gift any money, is it taxable? And what they mean is it taxable to them or is it taxable to the recipient, whoever they'd want to give it to? So then we get into the discussion and I ask, well, who do you want to give it to? And they'll say, well, I want to give money to my kids or my grandkids, or I want to set up an account for college for my grandchild, the newborn 1-year-old. So we get into all these different issues. Some will say, what do I need to do on life insurance for buying life insurance on a 1-year-old? So all these different issues come into play, and there are some year-end strategies that we could sometimes use to maximize on taxes. So the first one I wanted to share with you is actually a gifting strategy, and it deals with the amount of gift that one person's allowed to give to another without being on the radar at all for any taxes, income taxes, estate taxes, gift taxes. So I thought, let's talk about that for a little bit today, because we're near the end of the year. You may want to apply a strategy to, do I gift? What kind of asset do you gift? So you might have some stocks, and you might say, I want to gift some stocks. Or you might have some cash, and you might say, I want to gift some cash. Is there a difference? Yeah, there's a huge difference. And then when we get into, we want to gift money for a future need, like college education, now we have a totally different concern, because where do we put the money? Or where do we recommend, if we're gifting to a grandchild, for example, for college 18 or 20 years from now, where do they put it? So sometimes the grandparent is gifting the money to the parent on behalf of the grandchild, and other times the grandparent is gifting money directly to the grandchild. Of course, there's only 1 year old, so it's in an account for a grandchild who really can't have access to it until they turn age of majority anyway, which is age 18 in Pennsylvania. So it's confusing to do such a simple thing. But most people who do it don't do any of this analysis, so they have no clue what to do. Step one, can you gift money and not owe income tax? Yes. Let me qualify what that means. When you have money in your own account, you've already paid tax on that money. That's how it's in your own account. That's not taxable to you if you use it. So if you transfer that, hand the dollar bills over to somebody else, write a check over to somebody else, transfer the money in any form over to someone else on money that you already paid tax on, it's not taxable to you to take it out and give it to them. It's not taxable to them to receive it. So that's the interesting thing. A lot of people have said, wait, that's not true. There's a limit per year that you can gift money before it's taxable. And I'm here to clarify that and to kind of simplify and straighten that out. No, it isn't taxable, because we're dealing with two different income taxes when we talk about this discussion. A lot of people confuse gift tax with income tax. When you gift money, there's no income tax due when you transfer money to somebody else. That money that you're gifting has already had tax paid on it. So when you gift that after-tax money, it's already tax-free. So you gift it to the child and it stays tax-free. Now, they say, what about this? I heard there's a limit of $10,000 and $14,000 and you're only allowed to gift so much. That's not true either, folks. You're allowed to gift as much as you want to anyone that you want at any time that you want. So I know I've confused a lot of you listening saying, wait a minute, that's unlike anything we've ever heard. How can that be true? Here's how. The rules apply like this. Income tax, you pay an income tax on taxable income, and any money you receive from anyone else as a gift is not typically taxable income to you, the recipient. So if you're reversing that and you're gifting money, let's say you're a grandparent, you want to gift someone $300,000, and you want to do it before the end of this year. So you write them a check and you give them $300,000, or you transfer the account balance from your account electronically over to them, or you hand them the cash, or whatever it is as far as cash. You've already paid taxes, income taxes, on that money to have that cash available. So you can gift unlimited to anyone else that type of money that's already had tax paid on it. It's not income taxable to anybody, folks. It is if you pay them to do a job or something, but not as a gift. So where does the confusion arise? The confusion arises because anytime anyone transfers money, either by inheritance or by gift. Inheritance is upon death, and gift is during life. So that's called an inter vivos. Vivos is a legal term for living. Inter vivos is while we're living. That's a gift. And when you gift money while you're alive on money that you've already paid income tax on, there's no income tax to the recipient either. There is a rule that says, and it's a federal law, and it's a tax law that says there is a federal estate and gift tax due if you gift any money, and there's a limit per year that you're allowed to gift without having to file any paperwork acknowledging that gift. In 2014, the gift amount that you're allowed to gift without having to file a gift tax return is $14,000 a year. So anyone who wants to gift $300,000 can still do it. But any amount that's transferred from one individual to any other individual that exceeds $14,000 in one taxable year requires a gift tax return. Now that sounds contradictory to what I said early in the show, where I said you could gift any amount you want, any time you want, to anyone you want. That's still true. The $14,000 is only the test that says if the gift exceeds that amount from any one person to any other one person, then a gift tax return is required. Here's the important consideration. Filing a gift tax return does not mean paying a gift tax. Because just like filing an income tax return, if you only make $5,000 a year, you might be required to file an income tax return for record keeping and recording purposes, but you may not owe any taxes on it. So earning the $5,000 might be totally tax-free, even though you have to file an income tax return to prove to the IRS you received the funds. It still might be tax-free. So I might make the statement in that case, you can earn up to $5,000 and not owe any tax. And then at the end of the year, the person will call me and say, I don't have to file an income tax return, right? And I'll say, well, yeah, you do. Maybe. And they'll say, why? You told me I didn't owe any tax. And I'll say, well, you don't owe any tax, but you still have to file a return showing you got the money and then documenting you don't owe any tax. It's the same in gifting. You gift anyone money under $14,000 a year from one person to another, you don't owe any income tax returns for federal or state, and you don't owe any inheritance tax returns because nobody died, and you don't owe any gift tax returns to report the gift because it's under the $14,000. If you choose to gift, in my other example, $300,000, let's say it's everything you have, I'd counsel the client who'd say, can I gift everything I have to my grandchild? Well, actually to my child, let's say, to take care of their child because their child's handicapped. So we want to transfer everything that we have over to them, and they're only worth $300,000. And in this example, they want to transfer it all. Can they do that? Yes. My next answer to their next question is going to surprise you. They're going to say, is it taxable? I'm going to say, well, what kind of tax? They're going to respond, no. Is it taxable? So I'll say, it won't be income taxable if it's already in your checking account, it's already your cash, and you paid all the tax. And it's not gift taxable either if $300,000 is the extent of everything that you are worth, and you gift it all. So they'll say, well, I thought we had to file a gift tax return over $14,000 in any one tax year. And I'll say, that's correct. They'll say, so it's taxable, right? And I'll say, no. And they'll ask why. And I'll say, because no gift tax is due, even though a gift tax return is required in that case, until you've gifted over your lifetime in excess of $5.34 million. And they'll say, oh, well, this isn't very close to that, is it? And I'll say, no, it's not. So they'll say, you mean we have to file a gift tax return for information purposes only, and they just credit that I've gifted $300,000 and I still can gift another $5 million almost before any gift tax might be incurred? And I'll say that's correct. They'll say, well, we don't have another $5 million. And I'd say, well, don't worry about it then. We'll file the gift tax return. They'll put on record you've given the first $300,000 toward your $5.34 million you're allowed to gift over a lifetime before any gift tax is due. So we do the gift tax return, the Form 706. We file the return. We comply with everything. It's on record with the government. They later pass away, and their estate is closed, and no gift tax or estate tax is ever due because the amount of assets total in their lifetime and after death transferred to anywhere else never exceeded $5.34 million, which is the exemption. So now that casts a new light on this gifting, doesn't it? Because that means we don't have to care about the $14,000 as a hard and fast rule restricting us from gifting more than that in any year. Once you know how these rules work, you realize we can gift $100,000 a year. We can gift $500,000. It doesn't matter. You have to record it. You have to file a gift tax return if you gift in excess of $14,000 a year from one person to another person. Let's take it a step further. Let's say we have a family, husband and wife, 4 children, all under age of majority. So they're 14 years old, 12 years old, 4 children. Is it possible, someone might ask me, to gift my 4 children $14,000 a year each and still not have to file a gift tax return, so we don't even have to record it. I'll say, absolutely, that's correct. How about my wife? Can my wife do the same thing? We'll say, aha, you're thinking ahead. Good for you. A lot of people don't think about that. They think we, the parents, can gift our 4 children $14,000. But in fact, as you'll notice, I was clear to say any one person gifting to any other person in a tax year up to $14,000. So I'll commend them and say, you're exactly right. Your spouse, your wife, can do $14,000 individually from herself to each of the 4 children too. So that is $14,000 to 4 children, but it's really $28,000 to 4 children, because that's what they call, I don't know why they call it this, income gift splitting. I don't know why they call it splitting, because it's $14,000 a person, and if 2 of them are doing, it's really multiplying it. I don't get that. But it's $28,000 if a husband and wife both decide to individually gift up to the annual maximum before you have to file a return. That's over $100,000. So I would do some estate planning. We might run into a case where the parents say, we want to start shifting assets to our children and avoid later probate, inheritance taxes, things like that. So we want to do inter vivos or lifetime gifting strategies. So we set that program up, let's say, and they transfer a little over $100,000 a year, and they choose to do that every year because their estate is worth $5 million, let's say, or $10 million. And I'll get into the details in that if we have time. So they're doing this gifting strategy of shifting income to the kids. It's not really shifting income because it's after tax assets already. So they're really just shifting assets to get them out of the parents' estate and building the children's estate. So they'll say, well, I don't want to give money to my 5-year-old kids or 10-year-old kids. So they'll establish sometimes a trust, transferring the assets to the trust, transferring them to someone else. Get legal advice. I'm here as a financial planner. I am not trained in the law or legal, anything to do with legal strategies. So I'm not able to counsel, even now, on is this a good strategy? Is this a bad strategy? That's between you and hiring a competent attorney, a legal advisor, and a financial advisor, and a tax advisor on your team. As I've recommended before, build a good financial and legal team and a good insurance professional and get the teamwork working together. Is this a strategy that you can employ to shift assets? Okay, grandparents, how about you? You want to actually gift to grandchildren, let's say. You could do the same thing. So don't be afraid. Everyone who's listening is usually afraid to gift more than $14,000 a year. If you had a $2 million estate for yourself and your spouse, you want to transfer the whole estate to all the kids. You have 13 or 14 kids and grandchildren. For whatever reason, would I recommend that? How would I know? Everybody's situation is different. So you get your legal advice. But can you do it? I'm here to help you with the rules on just helping understand some tax laws. Can you gift $1 or $2 million a year when you've been taught this rule is you can only gift up to $14,000 a year to any one person? No, you could gift $2 million for the year if you want. But it counts against, because you have to file the gift tax return. It counts against the $5.34 million. So you only have $3.34 million left before you will start owing gift tax on any future gifts that exceed that amount. Now here's another bit to that information. you'd ask the question, does that mean I, the husband, can gift up to $5.34 million in my lifetime? And then my wife, my spouse, can also gift up to $5.34 million too, before either of us owe any gift or estate tax? I didn't say before you have to file a return, but it's getting credited against your lifetime maximums before you owe any gift or estate tax? The answer is yes. That is exactly correct. You can each gift or die and have someone inherit up to $5.34 million on each of your two estates before any federal estate or gift tax is due. Listen, folks, this is complicated because the minute I turned it from a gift to an inheritance, now we have probate. Now we have Pennsylvania inheritance tax. I don't have that on a gift. I do have that on an inheritance. So just because you're exempt from federal estate tax does not mean you're exempt from any tax upon death, because there is Pennsylvania inheritance tax consequences on death. But we don't have that upon gifts. So get your legal counsel and your tax counsel, like I'm recommending. Do not try to do this on your own, because I'm giving you a general, basic information on some strategies you can use before year end if you wanted to. I'll share this with you too. At the gifting limits, if your estates are worth far less than these $5.3 million assets, verify what I'm saying. Get to tax professionals and say, are we able to actually give away everything we have and still no gift tax will ever be paid and no estate tax will ever be due? And the good tax advice will be, yes, but we do have probate, and we do have Pennsylvania inheritance tax and things like that upon death, but on gifting you don't. So you say, I can gift $50,000 because my daughter needs it for a down payment on a house and not have to worry about it. And we'd say typically yes, but you have to file a gift tax return. And then we'll say, but we have a question for you. And they'll say, what is that? We'll say, well, the daughter's married, right? And they'll say yes. And we'll say, well, you're married too, right? And they'll say yes. We'll say, have you ever thought about you, the husband, give $14,000 to your daughter, and then you, the spouse, the wife, give another $14,000 before December 31st, if you want to your daughter. And then you, the husband, go back and give a second $14,000 to your daughter's husband, your son-in-law. And then your wife does exactly the same, another $14,000 to her son-in-law. So you've transferred, in essence, $48,000. When you look at that, $14,000, and you do that times 2, that's $28,000. And I said $48,000, but I'm going to correct that here in a minute. That's $28,000, and you did $28,000 to the son-in-law also. That's actually $56,000, which is more than they needed. As I just errantly said, $48,000, but it's $56,000. You've transferred and not even requiring any gift tax return to be filed, let alone that there's no gift tax due. All of these examples I'm using right now were gifting cash. Our next discussion I hope I can get into before the end of the year is gifting stocks, gifting securities, gifting things other than cash, because when the person that receives them cashes in stocks or whatever, if you gifted those, there might be income tax due. So we'll talk about that next show since we're out of time. And we'll also talk about that you could do direct gifts to pay medical expenses and educational expenses for the person and gift an additional $14,000 in cash. So we'll get into some of those issues and benefits hopefully next week. I want to thank you all for tuning in. Have a very happy holidays, and we'll be back again next week.
You've been listening to All Things Financial with your friend with the answers to all financial matters, Jack Driscoll of Driscoll Insurance and Financial Services. Securities and investment advisory services offered through Sage Point Financial Incorporated, a registered broker-dealer and registered investment advisor and member FINRA and SIPC. Driscoll Insurance and Financial Services is not affiliated with Sage Point Financial, Inc. or registered as a broker, dealer, or investment advisor. You can reach Driscoll Insurance and Financial Services Incorporated at 412-833-1500, and they are located at 2738 South Park Road, Bethel Park, Pennsylvania, 15102.